All right, I think it had to start a new one. All right, I think I rebooted everything that needed to be rebooted. Looks like we had to start a new stream. Yeah. All right, so anyways, we're here. Guten Morgen. Welcome to Forex.Today, the YouTube community of more than 20,000 foreign exchange traders. Huh? Does it look okay? Huh? Does that look okay? Yeah? Yeah? All right. Why do I have my church clothes on? Well, hey, today is a Fed meeting with a summary of economic projections being released. And that's when we do the Council of Investment Advisors. We have a team that manages my money for me. Yeah. So anyways, today we are going to rotate the portfolio and allocate about $8,000 in new investments. Very cool. In my real account with the real Wall Street firm, because it's my retirement pension. It's my corporate pension fund. So anyways, that's what we're going to do today. We started in November with 50 grand. Now there's 65. Not bad, huh? So we're doing our job. This is our second investment meeting. So we do that a few times a year. So anyways, been a good 3 months. All right, so lots of other things going on in the world. We have the Fed meeting, as we know. Great. I'm going to try to set it up so that we can meet today. Probably at Quant Box. Are you guys want to do that, or should I skip it? Because I'm telling you, I have a very, 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 very busy day with the council. And so in my little bit of time that basically I have to cancel a meeting with somebody else. And then I can set up a way for you to attend with me live, to watch the press conference and all that kind of stuff. Review the summary of economic projections together, watch the first half hour of the press conference, and then I got to get back to the CIA meeting. Would you be into that? If not, dude, help me not waste the time. Cool. Anywho, tomorrow we have Swiss National Bank and we have Bank of England. So we got a busy week for sure. So anyways, welcome. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, never risk money you cannot afford to lose. So please let me know how I can help. I guess now it's like if Vanilla Ice had a baby with Ellen. Or if Anderson Cooper had a baby with Ellen. Wouldn't that be great? Yeah, I went with Paisley. It's Paisley. Anywho's, right? Paisley. That goes. Get in there. Anyways. Yeah, so anywho, Justin Bieber's dad Yeah. Hey, I was thinking about getting a neck tattoo. What do you think? Right there. Yeah. Anywho, so let me know how it can help. What you want to cover. There's lots that we can discuss. I'd like to keep today's meeting actually fairly brief because volume and volatility is going to dry up, right? A bull and a bear. That's not bad actually. You know, I could put like an angel and a demon right here, and they whisper in my ear. Yeah. So anyways, yeah, we're going to lose volume and volatility. Everyone just wants to get to the meeting, get the SEP. We already know the outcome of the meeting. We just want to hear the tone of voice in the press conference. We need the dot plots. That's what people care about. Just give us the dot plot. So whatever. So I don't think we should do a lot today, technically or fundamentally, because get in pretty quickly. If you want to see the kind of stuff that we do at the CIA, here's our agenda. And we have lots of pretty colors, huh? Isn't that nice? Lots of pretty colors. Lots of pretty colors. Lots of pretty colors. So, too bad, so sad if you're not on the council. Let's get rid of here. This is Aussie dollar. Aussie dollar. Okay, so QuantBox back in January was bearish on Aussie dollar and has remained very much so. What this shows is there was a pullback and then a new set of aggression for bears. Pretty nice stuff, isn't it? This is the backtesting tool at QuantBox. It shows, so QuantBox and TRADARS has complete transparency. Oh yeah, speaking about TRADARS, let me get rid of that. Today's email, yay, yay. So, what's on the calendar today? Okay, balance of trade out of Japan, Fed interest rate decision and press conference, and SEP all here today. And some manufacturing PMI out of Germany. Okay, euro dollar flat, USD yen up a bit. Pound dollar flat, USD Swiss franc flat, Dow flat, Nasdaq flat, S&P 500 flat, FTSE flat. Hey! Maybe because of the news? Yeah. Lucas says you use the backtester a lot. That is cool. That makes me really happy, Lucas, because I'm afraid like a lot of people don't use all of the tools, and I think that one is a pretty powerful one. So, awesome. And so this is the kind of stuff that subscribers at Traders gets every morning. 4-hour up trade for Amazon. Google, nah, doesn't look good to me. Meta, back to there. Yeah, whatever, little scalp. Yeah, whatever. I look at that NVIDIA. Once again, I see consolidation. It sees a move here. It's a little overbought, whatever. Ooh. And then I look at this and I'm like, ooh la la. Yeah. So to me, the stock market looks like it's consolidating, right? Aussie dollar, look at the down. Channel down identified today. This is today. This pattern is still in the process of forming possible bearish price movement toward the support of 64.5 within the next day. Supported by downward sloping moving average. Gee whiz, it's beautiful. Yeah, it's beautiful, hey? Yeah, it's cool. Euro dollar down channel. Moving down to 108 within the next day. So another day trade. Very cool. So point A is the last, right? The last bump of the downwards, right? Channel. Very cool. USD Kitty CAD up. Channel identified 4 o'clock this morning. See, this is all brand new stuff, guys. This is not like leftover. This is from 4 o'clock this morning. The email was sent at 6 something. Channel up identified. This pattern is in the process of forming possible bullish price movement but towards 136.5. Look at that. Pachow. Thank you. Thank you, TRADARS. Bitcoin coming down to what? Really? Shoot, because I'm in a Bitcoin right now. I hope not. Yeah, I'm watching it on a 5-minute channel. When do I get out? All right. Well, what does it say? Where'd the Bitcoin go? It's saying 65.59 on a 4-hour. Okay. 63.5. How long can I stay in? We're at 64. Is that it? There's the biddy. Yeah. It has 65.5 as the key one and then back down. 64. Oof. Yeah, well, I got work to do. I might have to just bail on that later. Working on it. Cool. What else is going on? According to TRADARS. Oops, come on. Okay. Wow, there's a lot of trades today. NASDAQ up a little bit. Looks like a little scalp. Not interested. US S&P 500. So remember, it's only doing technical analysis. It doesn't know there's a Fed meeting coming up. It just sees a pattern, and it says, hey, this seems to be a bottom of a channel. Let's take it up to the projected top of the candle. So channel. So realize it's doing a linear projection from the top, right? So it's calculating, I suppose you call it a form of standard deviation and with some linear projection. And so it's saying, well, it's calculated A, and so a breach from the mean would take us to the top of the channel. Okay? Probably take a couple of days to get there. It's on the 4-hour chart. S&P 500 going up to 5250. But once again, be careful. We have a Fed meeting that could get us there today or get us down to 5,000 today. Okay? Well, Don, these are developing patterns, so you have time to set them up and look for your. These are not like if you're not in them in the next 12 minutes, you've missed it. No. Many of these last for days, and they're things that they're right. Like they're not trade plans. They're emerging trading patterns. So you would say, ooh, well, I'm interested in selling FTSE, and it seems to be setting up bearishly. There's a bit of a down channel according to TRADARS. So go to your charts, develop, look at it. What do you like about it? How would you set it up? Do you agree? Do you disagree? All that kind of stuff. It's just a technical analyst submitting reports to you. Why not Asia? I suppose if you paid more money, I could have it developed, right? Yeah. Crude oil, I mean, it's nice, right? It popped up and now it says down. But see, like I use as a trader, I use much different methodology for trading. Okay. This AI is using basic trading patterns. And I use basic trading patterns, but I also do a lot of other stuff, right? And I know right here is a place that I've identified that bulls would take profit. Completely different methodology. But the AI says down, which is cool because this has been up for so long. And all of a sudden, like, I look at it on my charts and say, well, this is a take profit, so it's probably going to come down. And TRADARS says, for completely different reasons, yeah, it thinks down for now. And I love it. Oh, yeah, Jim, I guess that is true. The email version comes out once a day. Yeah, that's all. I mean, I can't. But, and by the way, the email took weeks of development time. Yeah. So anyways, but yeah, Jim, you're right. The online subscriptions and the plus subscriptions, yeah, you get all this in real time. Yeah, it's, and I love it too because when you open them up, it'll say like, oh, here's something I found 12 minutes ago. Yeah. Gold coming down, like, dude, there is what is this? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14 trade plans today that it's spotted. And they're all brand new, right? This one was last night, okay? They're new trade plans, and that service is 61 cents a day. Wow. Wow. Yeah. Wow. All right, I'm hanging on, but dear life, tick by tick, I'm watching Bitcoin. Yeah. What are you guys watching today? Oh, and you're probably, for those that want that email, I guess. Let me show it to you. It's so funny. The website keeps thinking I'm a developer. I have some developer cookie somewhere. Okay, we're the 61 cents a day. Here's a video tour, by the way, right there. Okay. So anyways. Solana, if you emailed me, I could plausibly add that. That wouldn't be too, I have the, let's put it this way. I have the data. Because of development cost, I prioritized. Okay. Yeah. Sal says NASDAQ. What about NASDAQ? You want to trade NASDAQ? Hakeem wants to do oil. Jim, there's a typo in your email. There you go. What goes around comes around, goes around. Yeah, I can do my WTI. I just gave you a trade plan, like no, TRADARS did. TRADARS has already shown what I've done. Look at this. Look at my X. Okay, so TRADARS already has this. It was emailed to subscribers this morning that oil's coming down. And like I said, with completely different methodology, I concur. Okay? I've been a bull, and that's a buy, 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 and that is an out. Holy schnicker schnocker. And then TRADARS kind of said, well, this is getting tighter and tighter and tighter and tighter, right? And this has been, wide and then getting tighter and tighter and tighter. And it spotted a break of an apex. A break of an apex. Oh, I see, Sally. Thank you. Okay. So that's how TRADARS saw it, a break of a wedge. And I'm like, well, the tools that I use are more predictive, right? They're leading indicators. So that's where you get out. Getting rid of that using, more of a standard technical analysis process. It's not predictive, it's reactive. Remember, technical analysis is looking at past performance. So it doesn't use a leading indicator. It uses lagging indicators like all technical analysis. And it's suggesting, well, it's the channel's getting tighter, the channel's getting tighter, the channel's getting tighter. And as you get to an apex, which is where the triangle meets, that's an apex right there. And it breached a couple of hours ago, a few hours ago, right? A few hours ago, it alerted TRADARS subscribers. They're like, oh, snap, it's bearish now. Huh. Well, that's pretty good. That's pretty good. Well, hell's bells. Okay. Hell's bells. Take no prisoners, won't spare no lives. Okay. Oh, Bitcoin. I'm watching it so closely. Oh, we're back below 64. I hate it. Yeah, so anyways, that's what's going on the oil. Watching Bitcoin closely. We can take a look at short-term indices. Yen weak, dollar strong, Kiwi weak, yeah. Aussie trying to make a move. So we go out to the yens, see how the yens are doing. Yup. Okay. Kiwi following our channel. Thank you, Kiwi. My Aussie trade is now, I'm in at, can anybody see that? 97.5. So I'm up 150 pips now on that trade. We did that in the day trading group. We discussed it in great detail. We discussed not the entry. That was easy. We discussed the risk management in great detail, had a very open conversation about risk reward, about trader psychology, that kind of stuff. And now we've been rewarded for it. That was nice. I feel good about that. That was a really cool discussion. and I think it had value. Yeah, I mean, when we were still here, let me do this in a different color. When we were still here, we had probably a half an hour discussion, trader psychology. And now we're here. Cool. So good. Very good. Very good. Oh, stretchy. Oh. Yeah. Right on, Denise. I'm glad. I mean, yeah, it was good. We can look at the global stock markets and see how they're how they're dealing with Fed risk, if you will. We're still in a buy zone for the Chinese stock market. Okay, I highlighted this 1 or 2 days ago. Okay, and okay, this is the zone for new up. Okay, has it happened yet? No, not yet, but it hasn't not happened. Okay, we do have a 2155 cross now, so technically on the daily chart, this is bullish now. Okay, and I've been in, are these weeks or months? Months. I've been in more than a month now. Okay, my entry's in here, and we're much higher than that now. Cool. Are you guys okay that I'm in a trade for more than a month? If you've seen me in a trade for more than 6 months, type in 6 months. If you've seen me in a trade 6 months or longer, type in 6 months. Just trying to see who sees what. That's very good. That's very good news. Yeah. Yeah. Psychology comes into play with bigger lot sizes for sure. So that's why you should pyramid instead of gamble. Sal says it's irrelevant. No, it's not. No. So, no, it's not. So, like, for example, a standing rule is 1 mini lot, right? For, well, no, I should now, let's do this differently. Okay. All right, so you have conviction, Sal. You have conviction. You want a position, you want a bold position in a trade. Well, if you put all your cash in at once, it's an educated guess. No matter how much research you do, you don't know the future. You have your projections and your guesses and all that kind of stuff. So you could put the whole wad on all at once. Let's say it's $1 million. Well, that is risky. And if you are an institutional investor, you have a mandate to be risk averse, and that you should have risk controls. I mean, you literally have to, in your disclosure document, if you're an NFA person, or in your memorandum, if you're an SEC person, you have to address your risk controls. Okay? And so just inherently, if you put a lot of money on a trade, even if you've done a lot of research, doing it all at once is inherently risky because you just might be wrong. And you might not be wrong in direction, but you could be wrong on time, that kind of thing. Okay, fine. So how could you do the same thing but have very, 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 very little risk, and at some point, no risk? And you do it by stepping up. So let's say you do, instead of $1 million, you do a $100,000 position, and it takes a week or two, and you feel comfortably profitable. You have 100% available margin. You have literally no risk. You have profit with a stop at break even. You literally have no risk. So on the next dip, you add another one. On the next dip, you add another one. Each time moving the stop to break even. And maybe now over the course of months, you've built it up to the $1 million, but you never, ever, 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 ever were exposed to more than $100,000 in risk. And even then, you're not going to lose $100,000 because you might say you risk 2% of the 100,000, but on a $1 million position, now it's irrelevant, right? But then you add the other one, but the first one's profitable, and you add the second one, they might offset each other by 50%. So now on the second trade, because the first trade is profitable, you're actually now only risking 1% of the second 100,000 instead of 2% of the second 100,000. So anyways, what you've done is now you've doubled the position, but now you have half the risk of the first position, because the first position has no risk and profit. Okay? And then as you're going along, you never, ever, 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 ever face more risk than 2% of 10%, which is 0.2%. Versus you drop $1 million all at once. Oh my God. Okay? You have 10 times the risk. And you might be right on the idea, on direction, but you might be wrong on timing, or you might actually be wrong on direction too. And you don't want to find out the hard way with, a 10% drawdown. You have a 10% drawdown, you're going to get redemptions from clients. You might get sued by a client. So you got to do it kind of like build up. Okay? If you're adding to the winning position, you are also taking high risk on the second and third. You're not. No, because they're independent trades. So the other trades, you have stops at break even. You're not compounding drawdowns. That would be bad. No, you don't. So you got the first one at break even. So your worst case scenario is you get knocked out, but you've lost no money. Okay? Add a second, add a third, add a fourth, add a fifth, but you're not moving the stops either. So now you have 10 positions that are staggered, and the stops are below each. Like daily pivots are perfect for building positions. Okay? Supposing all the stops are below. No, that's not how. No, I don't necessarily do it that way. So this is what Silly Sally's saying. And, you can do it this way, Sally, right? I'm not saying you can't. But it's a good point, so let's talk about it. So let's say this is very tradable. You take a shot. Over time, you move your stop to break even. Oops, so let's get rid of this other thing. Okay? And then let's say your second one's here. Do you put this stop below this? You could do it that way. And then the third one, that's another obvious trade. Do you put the stop here? You could. And that's where you're now compounding, right? To that, right? You're compounding because you're now you have this as risk, plus this, which is even more as risk, plus this, which is even more as risk. You could do that, and I might do that in certain circumstances. What I found is to work better, though, and this might even be your point, right? But what I found as better for me, in my experience, okay, is that this is an independent trade, so I take that and at some point move my stop to break even. And then I take this trade and at some point move my stop to break even. Take this trade and let's say it fails. Oh! So I take the trade, but it does one of these things. Okay? So I take a small loss on this. I take a break even on this. This stays in, and this stays in. And it turns bullish again. And I start a new process of buying the new, waves, if you will, up. Okay, so I lose, let's say, 20 on this, 0 on that, but these are up hundreds. Okay? Okay? Temtem, in April, I'm going to open some discussions with prop firms that work with Americans as well as foreigners. And what I'd like to do is go meet them. I want to meet the people. I want to go to the office. I want to see if it's real, right? See if they have real people. See if they have tables and chairs. Yeah, I want to know that it's not a P.O. box. A prop firm, right, run by Hoochie Mamas, the Hoochie Rebels, that kind of thing. So, and there's some people I want to talk to that have been with a lot of these firms. What do you like? What do you not like? All that kind of stuff. And then many of them in the United States have had to go through regulatory issues, both with the government, but also with their trading platforms. So as you know, like MT4 and MT5, MetaQuotes has dumped prop firms out of concerns for compliance and, specifically regulatory issues. So, I want to go talk with these guys, okay? And I want to talk to some traders and all that kind of stuff. But my idea is to open a service specifically for you guys. This service will include investor bootcamp coaching. It'll include QuantBox research. It'll include TRADARS, radars, and it'll include a funded trading account so you can trade money. And it'll be all branded under one brand, one service, one fee. Okay, so again, coaching, fundamental AI, technical AI, and a funded account. One subscription to rule them all! Huh? Ooh-wee! It's going to be amazing. Okay. So anyway, great discussion on, in this case, building positions. And I like these conversations, Sal, so I'm glad you brought them up because trading a bunch of trades and then dumping them at the end of the day is just amateur hour. Okay, you will need to learn how to do fundamental analysis. You will need to learn how to do technical analysis on higher time frames. You will need to learn how to address the psychology issue of building large positions. And you will have to gain the strength and confidence to let your winners run. And it's not easy. But if you can't do it, you will never become a professional. You will stay small retail. Now, maybe that's okay. Maybe with prop firms, it's okay. Maybe. But I'll tell you, if you get the bigger picture correct, right? Now, Sal says it's backtesting and integration. Well, I suppose if you mean practicing your price action skills on a back tester, okay, like what do we call it? Simulation. So some of the stuff that we do at FX Bootcamp is very similar, simulator oriented, and I love the fact that gets done. Love it. But the idea of backtesting, I hate that word. It's a word I don't like. And, look, I studied all this at Oxford, right? And so when you backtest, inherently you tweak it to get the results you want, which is silly. But so anyways, but if you're just practicing trading on simulation, not a demo, but simulation, it's moving fast and you're making decisions, then I'm all for it. All for it. Muscle memory. Okay? But even if it's set up for you on, let's say, a prop firm, and you're doing, let's say, day trading and swing trading, but by the time you get to Friday, you don't have any positions open. Okay, can you make money? Yeah. Yeah, maybe depending on the size of your account, you can make thousands of dollars a month. Great. Well, which for some people is a car lease. So is that enough? Like, how do you become a millionaire? Not doing that. How do you start your own hedge fund? You need to do a lot more than that. You can't have 5 or 6 trades a week. And then at the end of the week, they're gone. When you talk to your clients, they want to talk about what you think the Fed's going to do the rest of the year and what your outlook for 2025 is. How are we going to make money next year if Trump wins? How do we make money if the Fed doesn't cut interest rates? How do we make money if the Fed does cut interest rates? What will happen to gold? What do you think about Bitcoin? What about the stock market? What about... And you're like, I can't think more than 2 days in advance. You're just dead in the water. You'll never raise any, but luckily, and this is why I'm interested in prop firms for you guys, because up until now they were sketchy. And if they're being regulated more and they're becoming legitimate, then you'll be able to trade, day trade and swing trade and all that, and you'll be able to make some money. I don't think you'll ever have a Lambo, but you'll make some money. And some people are apparently making decent money, like 10, 20 grand a month. Okay, I think they're probably the exceptions to the rule. Okay? But Silly Sally says you don't need to raise money after a prop firm. I guess, if you can live on 10 grand a month, then great. But you know what? As soon as you get 10 grand a month, you'll realize 20 grand is better. And then things become a problem. Yeah. And then we don't know the future of the prop firms and stuff like that. Like, yeah, you can have 20. I get the math. And by the way, again, some of this gets silly at some point. Like, look, I'm a seasoned investor. 20 years ago, I was a venture capitalist. And before that, I was raising money from venture capitalists. So like, this ain't my first rodeo. And very often, like when you talk to a young high-tech entrepreneur, they come to you and they say, I have a great idea for, I have a great new technology. I created a startup and I want to raise money and we have no revenue now, but we're going to make a lot of money very quickly. And my company is worth $1 billion. And and I don't want to sell any of my shares and whatever. My valuation is nutso. And I'm like, dude, you got like 3 people in a credit card and you're worth $1 billion. Like, dude, right? But it's normal. And it's, to me, it stinks like rotten tomatoes when you see, and I'm not saying this is you, Sally, I'm just saying in general, it stinks like rotten tomatoes to me when you find, let's say, an amateur retail Forex trader. They've been trading less than 2 years, right? Where's my colors? Okay. They have less than 10 grand, less than 5 grand. Okay. Less than 5 grand in their account. They have no discernible track record. Okay. And they're like, oh, but I'm going to join a prop firm. I'm going to pass everything. I'm going to get myself a $100,000 account. And then I'm going to open up 20 of them and I'll have 2 million and I'll be making 40 grand a month by the end of the year. And it's fool's gold. You must. And again, Sally, I'm not saying you. I'm just saying everybody. Like, you got to have a sense of reality. The trading is hard, and you can't go from mediocre to exceptional in a few months. You must look at this as a business, and you must focus on sustainability. You're a business, man. So you need to look at this and like, how can you develop consistent results? How can you lower your risk tolerance? Like the stuff that I'm teaching people now with the CIA. Dude, the risk that I'm taking with the portfolio the CIA is managing is ridiculously low. And my results, and I'm going to go over it with the CIA, our results are extraordinary. Extraordinary. With incredibly low risk. That is what you want to do with everything you do when it comes to money. So I would say someone that is mediocre now is not going to be extraordinary in a little bit. Just it's a fantasy. So instead, this is how I would do it. Get your first account, build some accountability. And remember, I think the prop firm, when they give you numbers, you're over leveraged right off the bat. Right off the bat, it's set up, rigged against you. In a way, it looks like they want you to fail, and they want to treat you like, hey, buddy, come to our firm. You can have 20 accounts and you'll be a millionaire. So pay the $82 and try it out. And this is why I hate these firms. I still do. They're luring poor people with a get-rich-quick scheme. I hate it. I hate it. Okay? But if you kind of erase all the bullshit sales messages and you start looking at the numbers, okay. And ultimately, do you care if they're actually just paying you with all the failed traders? I don't care. If they owe you 10 grand because you were a successful trader and they really just take it from everybody else, I don't care. As long as you get paid your 10 grand, fine, right? At the very least. All right, so therefore, let's focus on how do we get you to the quote unquote real money, but it's not real money. How do we get you to the funded account so that you can be paid real money? The second thing is, okay, once that's cleared, how do we lower the risk? Because they're giving you too much risk because they're showing you the math. Hey, Jimmy, you'll be making 20 grand by month 3. Bullshit. Okay. Yes, if you do that math, but we know the math is based on ridiculous levels of leverage, which is nothing but risk and maybe even designed for you to blow up your account. Okay, great. Whatever. So let's not do that. Let's get you to the point where you can trade properly. I've always taught you how to be realistic, how to plan properly, how to manage properly, how to lower risk. It's in my book. The more money you make, the more you should lower your risk. Like, dude, seriously. All right, great. And then maybe in a year when you got account 1 lower, you have enough, let's say enough respect from the prop firm where they give you the rules and what you need to succeed. You got to change the rules from the initial rules, which may or may not be designed for you to fail, to the rules where they're like, okay, this guy's profitable. This gal is profitable. And think of it like an A book and a B book. You're going to be in a B book in the beginning. So you got to show that you're not a B book person. You're not going to blow up the trading account. You're actually going to make money. You're actually going to achieve the goals. And they're going to go, oh, snap. We got to A-book this person and actually enter the trades into the interbanking system and remove all the hedging mechanisms so that they're actually trading and we'll pay them from the actual trades. Where everyone B-booked, if they happen to be lucky, they're getting paid from the other trial subscriptions, right? Whatever. So you want to go from the B-book to the A-book. And once you get to that where they're like, okay, this trader's legit, right? Then you get the second and third and fourth account over time. And you build up. And you got to get used to like the copy trading process. And what do you need the second account for? Are you going to day trade on one and swing trade on the other? On the third, are you going to build positions on dollars or maybe a fourth one just yens? And, at some point you need to make management decisions. Okay. So let me help you. Let me fix this. Okay. Let me do it. I can't do it now. But I intend to start in April. So maybe in the second half of the year, like June 1st, maybe I'll launch this new service. So if you happen to be in the swing trading group at Investor Bootcamp and you have QuantBox and then you just signed up for TRADARS and then you're like, Wayne, I want your prop firm. You're like, dude, all these subscriptions? No, I'll bundle them into one so everything's in one place with one login and all that kind of stuff. So please give me time. Maybe by June 1st, you're going for your $100,000 account. And one of my goals, actually, one of my aims when I meet with these firms is that I'll pay for your prop firm too. Like that'll be included in this new service. So you get, Investor Bootcamp, you get QuantBox, you get TRADARS, and the prop firm all paid. Okay? And the idea is this new service is community oriented. So even if you're making a killing trading for a prop firm, you'll stay. You'll stay part of the community because you got all the tools, you got all the support, you got all your friends. It's just all there. And I want you to stick around, not just even though you're successful, but because you're successful and you want to be surrounded by other people like you that are outside of the prop firm. Because remember, the prop firm has material motives, or what do you call it? Not material motives. They have their own motives, which may not actually be aligned with you. Okay? And I want you to succeed. Everybody else in the group will want you to succeed. Ulterior motives. Thank you. So you know, because very often they have their own coaching, they have their own training. I've seen a few. It's shit. Pardon my French. My stuff's not perfect, but that stuff's crap. Okay, so it's more like, get the account, don't worry about them. Right? Let Uncle Wayne and all your friends surround you and take care of you, support you. Hey, I gotta go at 10 o'clock, which is less than 1 hour. The CIA is going to meet, and we are going to try to decide. I think there's 56,000 in the account now, plus 8,000 something in cash. So 13% of the account is cash. We need to probably rotate later today based on what the Fed tells us in the summary of economic projections. But the bottom line is we have almost 9,000 in cash that needs to be allocated. And it's an all-day process. If you want to become a professional money manager, if you want to start a hedge fund, if you want to start a nonprofit charity organization that takes in donations from people, you need to set up like an endowment type scenario. I now manage 3 charitable endowments. If you want to learn how to do that in the stock market, long-term investing, if you want to learn how to reduce your risk, my risk level is so low, it's stupid. But my returns are excellent. My Sortino ratio is my Sharpe ratio, my internal rate of return. These numbers are extraordinary. And I offer 3 different stress tests done by an outside firm. Like, dude, I'm telling you, if you want to learn truly how to be a professional money manager and investor and hedge fund manager and nonprofit charitable organization, you need to join the CIA. It's real. It's my money in my corporate pension account at a Wall Street firm. You see the money, you see the investments, and you help me make decisions. So the conversations are extraordinary as well. And most people are learning how to manage their own money, like their own retirement accounts. And other people are learning how to be money managers so they can do this for others. But the other thing is, this track record of success, which is earning 2% a month, which is my goal, is your track record of success because you're on the council. You're an investment advisor. You can claim this as your participation. Okay? And in the first 3 months, I've hit all the objectives. Not bad. With significantly less risk than the market, Sal. Okay? So if you're looking at that, Sal, that's close to 30% a year. Oh my God. 27% a year. But I'm doing it with 40% less risk than the benchmark itself. Okay? So Sal, 3 months ago was about 50 grand. Now it's 65. So in 10 years, it'll be $1 million. Less than 10 years. But yeah, I'm going to turn it into $1 million, and people are going to help me do it and learn from it. Yeah. So it seems like you might be poo-pooing it because it's only 50 grand. All right, it's not for you. People that are on this council will turn it into 1 million. But you got to have that mindset. You have to understand the math. You have to understand the patience. You have to understand the focus. The focus is not to make a lot of money. The focus is to make money with the lowest risk possible and have an income that you can count on. Because this is for those who are retired. This is for charitable organizations. So, for example, if you're a charitable organization and your donators have given you $1 million, okay, well, what are your revenues? What are your expenses? And the charitable organization needs to be able to live on the money that the $1 million produces, but never, ever, 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 ever touch the $1 million. So you have, in this case, let's say the charitable fund, the portfolio is generating $100,000 a year. Okay? Well, you can take that, and that's now your budget. You know what I mean? That's now the budget for the nonprofit. So what's the volatility in the returns? Is it going to be 200,000 one year and then negative 50,000 the third year? Well, you can never have the negative 50,000. You put the charity out of business because it won't be able to pay its staff, its rent, its electrical bill. It won't have a marketing budget to reach out for more members to their organization and their community. They can't do events. They're out of business, and it's because of you. Dude, the pressure is immense. So what's the outcome? How can we get the $100,000 a year with a risk level so low it's nearly guaranteed? I mean, you can't get it guaranteed, but you have to design it like you wake up in the morning and you're sweating bullets over the potential of risk. The potential of risk, the potential of risk, the potential. I can't have the risk. I can't have risk. I can't have risk. I can't have risk. Great. Well, the problem is you lower the risk so much, there's no return. Well, shoot. Now you need how do I make $100,000 and have no risk? How can I make $100,000 and have no risk? And so right now, the portfolio that the CIA has designed and implemented and is now managing and allocating towards, it would produce the 10,000. It would also go up in value, so it would be worth more than $1 million. And at the same time, when compared to the S&P 500, has half the risk. Oh my God. Okay. You see? Yeah. So anyways, cool. So anyways, right? That's what we do. It's good, right? Honestly, that's a great, right? Okay. Yeah. Well, actually, Richard, so the intent of the portfolio is that when I die, by then it'll have, let's say, $2 million in the account. Okay? And I can start giving money to charity. So at that point, it could be doing 25 grand a month. It can give to charity forever. 25 grand forever. Because that doesn't include capital appreciation. It can give $25,000 a month away and still be growing. So 100 years from now, it'll probably be doing 50 grand a month, and it'll be, it'll be 5 million by then. The kid's already taken care of. My son's going to probably have 20 million by the time he's my age. He's a teenager, and he has a Roth IRA that he's stuffing thousands of dollars into out of his savings. So on and so forth. Like they're fine. They're teenagers. They're done. They're good. They're set for life. Yeah. And this is just a pension fund for my company, my company. But my wife and I have other stuff going on too. Like this is a nice project I designed for the group. And we will turn 50,000 to $1 million, and then we could probably do it again before, So in the next 15 years, it'll probably be $2 million, and I'll be old enough where I'm just like, do I want to stop? I don't know. I don't have to do anything with the money until I'm 71, and that's more than 20 years from now. So let's say at some point I'll have to start monkeying around with it because the government's going to force me to do things. So I'd have to probably roll it into a nonprofit structure or trust structure or something. But right now it's designed for me to reduce my taxes. So I'm just reducing my taxes. This is all I'm doing now. I have no intention to use the money. Now, maybe I do when I'm 75. I don't know. I'm not 75 yet. I'm not even close. So, but you can see this is just one game that the wealthy plays. Just one of the many games. And I'm showing you how to play the game right. Okay? So I'm reducing my taxes today, but when I'm 70-something, I'll have a new problem where I'll have all this cash and I'm forced to withdraw it. Okay, but this account is compounding, every 7 years. It's going to double. So by the time I'm forced to take it out, it's going to double and double and double. So I'll get it to $1 million, $2 million. It could be $4 million by the time. I don't know what to do with that. Okay. So whatever. It's interesting, right? This is how you play the game. One strategy to play the game and to play it right. I'm simply lowering my taxes today, but my problem in the future is I'll have millions of dollars in cash from the money I used to avoid paying taxes today. I mean, it's so weird, right? Lower your taxes and then make a ton of money doing it. Well, you know what? That's the game. The game's rigged. But the thing is, you can play the game too. I'll teach you how to do it right. Well, and there's plenty more games to play. Hey, I really got to go. Peace on earth. May the pips be with you. May your profits be above average. Have a wonderful every